Good afternoon, traders. It is Tuesday, February 25th, 2020, and the U.S. stock market is closed. Another absolutely unbelievable day today. The Dow dropped over 1,000 points yesterday, and it dropped another 879 points today. You can look here on the long-term chart. You can see how this is where we're at right now. And we've dropped, from this all-time high to where we closed today. I don't know how many days that are, but it's, less than 2 weeks. And we're actually at right now, obviously we're not at record highs. We're getting close to taking out this low way back at the end of September. Well, we're not real close to that, but yeah, we really have corrected this big move from the end of September until right up here, which was still in February. So yeah, it's been a big drop. As you probably know, this is all being driven by fears of the coronavirus, and I don't want to dwell on this too much, but the fear is that the coronavirus will produce a worldwide pandemic, and that, of course, would push the worldwide economy into a severe recession, and this would affect many facets that are tied to the stock market. We're seeing already, for example, just huge drop in energy prices, and kind of the theory behind this is that if people are staying at home to keep from getting sick rather than traveling, our needs for energy are going to be greatly reduced. And so we've been making a ton of money in the last 3, 4, 5 days by shorting the energy sector. And that's kind of what's going on, but obviously it would affect anything. I want to tell you where I'm coming from. I'm an old guy, and my parents were old enough that they remember the Spanish flu pandemic of 1918. They both caught the Spanish flu and they both survived, and approximately 50 million people worldwide died from that pandemic. The coronavirus, of course, we don't have all the statistics, but it looks like, from what I've been able to research, has a fatality rate of about 2%. And that fatality rate isn't much different from just the normal flu that comes every year or so. And so my feeling is, for one reason or another, this thing is getting blown out of proportion to its real threat. And that could be due to many reasons, anything from political to medical or whatever. But I do not think the coronavirus really represents the kind of threat that would warrant these kinds of fears. But and I believe that that will become apparent fairly shortly, and we'll see a total reversal of this financial move. But I may be wrong, and I'll be the first one to admit I may be wrong. But I just think this is way overdone. And when this, after having made all this money on the downside that we've made, we're going to make a lot of money when this thing turns around and people realize we really don't have to be so fearful of the coronavirus. That is my opinion. Okay, enough of my medical and political opinions. We had another great day today, just a fantastic day. We closed out um, the trades we had from yesterday uh, while carrying over one trade in drip, and I'll show you that in a second. But so that one we did not take profits in, but everything we took profits in, we closed out. We had $42,000 in closed out profits today. It's getting better. We entered 9 positions, excuse me, and that includes the holdover drip. And with those positions, 7 are positive, 2 are negative, and we're holding positive another $41,000 in open trade equity going into tomorrow. So add that together, yeah, it looks like that's about $83,000. Yeah, big day. Lots of dollars there. And the reason we're making so much money is I kind of got smart and put a bunch of these stocks in our portfolio that are in effect short positions on the overall market, or they're short positions in energy, and all those are just lighting up with this huge fall in stock. So we're making a lot of money this time going down rather than losing it like we did like May of last year. We were just killed when stocks sold off in a similar manner. So we're doing really well with those positions. All right, Dow officially, if I didn't say, was down 879 points, and I think I covered all that. Let's look at a couple of the positions. This first one is TVIX, which is volatile volatility shares, I think. Anyway, it's a short position on the overall market. It's our biggest stock that's like that. The other one is UVXY, but this is TVIX. And I'm showing this because it's a model of about 6 of those short positions that we're trading. We exited those 6 positions, all of them, uh, today, and that's where that $42,000 in profits came from. And then we re-entered all of them, and that's where our $41,000 in open trade equity is coming from. So we and this, you'll see this right here. This is TVIX. We go all the way back to last Thursday on this, and this thing popped up on Thursday, kind of like insiders are saying, hey, something's going to happen with this stock. And we got into it and we closed with a small profit there. Then on Friday, it gaps up and pulls back a little, and we exit right there around midday, and we take $7,600 in profit right there. Then we get re-entered. This is on Friday, and it closes pretty much where we re-entered it. But then yesterday and Monday, huge gap up. As you know, it kept going. It closed right here. This morning, it gapped a little down, but then came back. So we were exiting right about where we closed on Monday, and we took on that trade $25,000 in profits. So at that point, we have $25,000 plus $7,600 racked up in TVIX. And what happens? It keeps moving higher. And when things keep moving higher, we re-enter it. And so that's what we did. We re-entered TVIX, and it still kept going higher. So on the close here, we have $5,200 additional in open trade on TVIX. Now, add those three trades together, we have $37,000. But keep in mind, only $5,000 of that is open trade. And that's why I like these re-entries. People think my re-entries are crazy. I know, I hear that all the time. They're not crazy. Been studying this for 30 years. This works. And part of the reason is I made all this money in this one stock, and I'm into it again, but I'm not holding it long term from down here. If this thing goes south tomorrow, yeah, I won't get my $5,000 out of it, but the rest of those profits, which is over $30,000, I have those profits. I nailed those down. So this is a good strategy. And this same pattern was repeated in 5 other stocks, not with as much money, but it was repeated. They're all doing pretty much the same thing. Same patterns, at least. Okay, and I'll show you the last one. And this is kind of a buy and hold. Not really. It's following our algorithm. But this is DRIP, which is inverse oil and gas exploration. So obviously an energy stock. And back on Friday, this thing gapped up. We bought the gap. It closed with a small negative on Friday. We held that over the weekend. And then, of course, yesterday it did this huge gap up. And, that put us over $20,000 on a trade. It pretty much moved flat all day yesterday. But this morning, it gets a second wind here and takes off, and that is enough to hold us in this trade. So at the end of the third day, we're still holding DRIP, and we have $27,500 in open trade in DRIP. So that $25,000 in this one stock is accounting for the majority of that $41,000 that we're holding in open trade going into tomorrow. Which all is to say, this is paradise. This is nirvana for a trader. I mean, there's practically nothing that has gone wrong the past 3-4 days. This is beautiful. We don't get this happening all the time, but it's happening right now, and I may even have a record-breaking month by the end of February because of it. Anyway, Trader Bob is happy. I'm signing off. You guys have a nice evening. I'll be back here tomorrow on Wednesday.